Chris, I feel like buying a new property and I have no idea exactly how much should I put down. Should I put down a big down payment? Should I put down a small down payment? Should I go conventional? Should I go jumbo? Should I go FHA? I don't know what to do. Let's talk about it. What's going on, good guys? Chris Newman here, Chris Newman Real Estate, chrisnewmanrealestate.com. Tell a friend to tell a friend. Like, comment, subscribe, smash that like button, smash that subscribe button. Help me get these numbers up. Right now, we want to know how much money should you put down on buying a property? You guys know what I'm going to say. It depends. It depends. It depends. It depends. It depends. Depends on everything. It depends on a lot. Let me not say everything. It depends on a lot. My advice, for the most part, just my opinion, for the most part, is to put as little money down as possible. Now, again, it really depends. So let's say you have $500,000 that you want to put into a home. Like you have $500,000 cash. If you want to park your money somewhere, real estate is one of the safest avenues to do that. If you want to park your money there. So if you have to put your money somewhere, let's say you don't trust the bank. Let's say you don't trust under the mattress, right? Let's say you don't trust art. Let's say you don't want to buy art and park your money there. We'll actually talk about that in another video. But let's say you don't want to park your money in those areas, right? You feel more comfortable parking your money in real estate. I would say do that. Go that route. If you want to put all your $500,000 or most of it and park it into real estate, do that. Put all of that money into buying a house. Now, let's say you aren't fortunate enough. Let's say you aren't fortunate enough to park hundreds of thousands of millions or whatever dollars into a property. Maybe you're a first-time home buyer. Maybe this is your second home. Maybe who knows? However, you're just not too aware of how much money you should put down. Should you put down 5%? Should you put down 10%? Should you put down 3%, 3.5%? My advice is going to be put as little money down as possible. Again, just my opinion. Why? I'm going to say this because I wouldn't feel that comfortable parking that much money into a property. Now, let's say this. You're going to put, let's say your down payment is $35,000, right? This is 3.5% on $1 million property. Your down payment is $35,000. If I got that wrong, do not clown me, okay? I believe I'm correct. So let's say $35,000 on $1 million property, 3.5%. So you're going FHA. Now, when you do go FHA, you are going to have to pay mortgage insurance. You're going to have to pay PMI, primary mortgage insurance, until your loan amount gets below 80%. Then it automatically falls off. You still should call your bank, but then it automatically falls off. So you are going to have an extra payment onto your mortgage until your LTV, loan to value, goes under 30%. So 80%. So basically you have to pay off 21% of the property's value. Yeah. And then you also got inflation that's going to help that go up anyway. So inflation is going to help you with that number. So the more value your property is worth, alongside with the more money that you actually pay on that property, is going to help that LTV, loan to value, go under the 80%. So now the PMI can fall off. So it may be smarter to put down the extra 1.5% to 5% to avoid PMI altogether and go conventional. It depends though. Do you want to put an extra $15,000 onto the loan? Do you want to lock in an extra $15,000? What can you do with that extra $15,000? Is tying up an extra $15,000 worth the extra 100? I don't even think it's going to be 100. Worth the extra, let's just say $40 a month. It may not even be that much, but let's just say extra $40 a month. So you're tying up $15,000 extra dollars to just pay off 40 to avoid paying extra $40 a month. I don't think that's worth it. Again, that's my opinion. And I could be off with the $40. It's not a lot of money though. So it's not like you're saving thousands of dollars a month by giving them that extra $15K. No, it's a very small amount of money that's going to be on your for your PMI. That's going to be on your mortgage. Very small amount of money. So do you really want to do that? Also, are you going to sell soon? If you're going to sell, most people sell after you purchase something. Most people sell within the first 5 to 7 years on average. They outgrow it, introduce more people into the fold, maybe jobs change, transfer, but typically and practically within the first 5 to 7 years, people make that move, especially first-time home buyers. So now, was it worth tying up that extra $15,000? Or if you wanted to put 10% down, but you could have went FHA, or you could have put 5% down, was it worth it? Now, there are options of buying down points. What is buying down points? When you buy down points on your interest, it's basically you putting 1% of the loan amount towards the interest, right? And that's going to basically take off a 0.25%. It's going to take off a point. It's going to take off a 0.25% of whatever that interest is. So just to keep numbers easy, if it's at 10%, if the loan amount is $500,000, you put $5,000 towards the interest. So you bring another $5,000 towards that, and you're going to pay that towards that interest. That's going to now bring your interest rate from 5%. Well, I think I said 10%, but whatever. From 5% to 4.25%. Okay, so it's going to take 0.25 off of that percentage over the life of the loan. If you stay in that property for the 30 years, you've saved that $5,000 10 times over. Maybe not 10 times, but you saved that $5,000 many times over, okay? So it depends. So now if you're going to stay in the home for a long time, let's say you're going to stay in that property for the 30 years, maybe even for 15 years, then yes, if you're putting money towards the interest, you have a higher interest rate or you have a lower interest rate, you just want to buy it down even some more. And now you just want to buy down the rate. Okay, cool. You buy down that rate and now you're saving, maybe put 5,000, maybe put 10, maybe put 20, I don't know. And you buy down that rate. By year 20 on, even if you still have that loan, you've saved so much money on interest just by buying down that. So yeah, I would say that's a good idea to put more money down, but it's not just as a down payment. You're putting that money towards something very specific. So I would say put as little money down as possible unless you need to park that money. And again, that's my opinion. Some people are going to say, oh, I got $300,000. I want to put a big down payment on. Now, a bigger down payment will make your offer look a lot more attractive than a smaller down payment. Yes, but for the most part, owners are going to go with the offer that they feel is more attractive. And if you're coming to the table with $50K more on your offer, but you're still going FHA, whatever, because the bank is going to pay that owner 100% of whatever they agreed to loan anyway. That isn't going to matter. Again, my opinion, I wouldn't lock up, and my opinion might change tomorrow, I wouldn't lock up that much money into a property unless it was strategically done. It was done with intent. Okay? Like, comment, subscribe, tell a friend and tell a friend. Chris Newton Real Estate, ChrisNewtonRealEstate.com. Smash that subscribe button. Later.